Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormuz Patakia. Hey Hormuz, good morning. Yesterday we ended above the 25,200 mark, but we have failed to maintain that for today. We've come up from the highs, almost a 100-point cut from the highs of the day as well. Right now we are at that 25,186 mark. Even from those levels, after turning into the green for a bit, we are seeing some further fall come by. We are seeing some pressure which has come by from the PSU banking names. Even the pharma pack is not doing so well. What is doing well today? The oil and gas space, we do have some gains coming in from IT as well. The CPSE basket in general is also contributing to the gains. However, all these indices have also come off from the highs of the day. In terms of major movers, ONGC is higher by 1.5%. Although in a conversation yesterday with the media, they did indicate that volatile crude prices are something which could be a problem for these oil producers going forward. But we do have Wipro, which is surging, Tech Mahindra, HCL Tech, all of them are doing well in trade. But the mid-caps, they are underperforming the benchmark. So let's go across to Hormuz. He's going to tell us all the top movers in trade today. Hormuz.
The index may be underperforming the benchmarks, but the stocks are in a league of their own as of now. You take a look at MCX to start off with. And today's move, it's slightly off the highs of the day, though. It's just 5% higher. It gained in 8 out of the last 11 trading sessions now has MCX. We had more than 10 lakh shares that have changed hands compared to a 20-day average of just 1.5 lakh. It's the second straight day of gains as well for MCX, and the stock trading at record high levels and is also nearing that 10,000 rupee price target that UBS has on the stock. And it's been a good performer over the last 3 years, up 51% this year, had almost doubled in 2024 and had more than doubled in 2023 as well. Now the other one that's on the back of news flow is MTAR Tech, and it snapped a 3-day losing streak on Monday. It's building onto those gains, now 12% higher on the stock, and it is the biggest single day gain that the stock has seen in 8 months. The last time it had such a gain was back in February. We have had 6.5 lakh shares that have changed hands, 20-day average of just over 1 lakh, and the stock was up 32% in the month of September and has continued to build on to those gains in this month as well. And as a result of these last 2 months, the stock has turned positive on a year-to-date basis. On the downside today, a stock that comes to mind is AGI Infra, down almost 14% now, and it's down. That was down around 4% in yesterday's session as well, so extending those losses. And take a look at the volume activity here. The trading volumes have been more than 10 lakh shares in each of the last 5 trading sessions. Today too, we have had already had 10 lakh shares traded. 20-day average is around 7 lakh, and the stock now is below its 50-day moving average of 237.90. That is an important level to watch out for. But it's done well so far in 2025 with 33% higher despite this 2-day down move, and it has had positive returns since 2020. And the last one on the list, an earnings reaction, Anand Rathi Wealth, the biggest single day gain in 2 months. Volumes are the highest in 3 months. We have had 14 lakh shares that have changed hands already. 20-day average here is just 48,000 shares. So take a look at the volumes here on Anand Rathi Wealth. The stock has gained every single month this year since the start of April, and as a result of which its year-to-date returns have now crossed 60%, has delivered positive annual returns every single year since its listing.
Okay, some interesting names there. Thank you so much, Hormuz, for bringing us all those names. By the way, some other movers in the markets. We have Anand Rathi Wealth, which is surging up 11%, and the management just spoke to CNBC-TV18 a while back. They've maintained their 375 crore PAT guidance and 1175 crore rupees in terms of revenues as well. And of course, the other big name that we are tracking closely is LG. It is the big story of the day, the stellar debut of LG Electronics India. Upasna is here with more details on the listing gains and a lot more. Upasna.
Well, certainly it was a bumper listing. The company listed at 50% premium at a price of 1710 per share versus the issue price of 1140 per share. Now, currently the stock is down about 3.5%, trading somewhere around the levels of 1600 per share. Now, let us look at some of the IPO details. Now, mind you, this was not a fresh issue. It was entirely an OFS, wherein promoters sold nearly 50% stake. The company has raised nearly around 3,475 crores from the anchor investors, and even the subscription levels are at a bumper level, becoming the first Indian IPO to cross bids worth 4 lakh crores. Now, if we look at the overall subscription, it was over 54 times. QIBs led the pack. So overall, summing up, it was a bumper listing.
For the bumper listing indeed, but Upasana, if you could give us a brief overview of what LG exactly does, how it is compared in terms of its peers. So give us an overview of that.
Certainly. Now, the company's primary business is manufacturing and selling of major home appliances and consumer electronics products in India, and the company has two business segments, that is home appliances and air solutions, which comprises nearly 75% of the company's FY25 revenue mix, and home entertainment division, which is the remaining 25%. If we look at the key categories in terms of total sales, refrigerator leads the pack with 35% share, followed by washing machine at 19%, AC at 21%, and television at 17%. Now, company commands market share in across all these major categories, leading by market share in washing machine at 33%, refrigerator at 30%, television around 27.5%, and air conditioner enjoys a market share of 18%. Now, demand recovery will be led by GST cut. That is one of the important growth trigger for the company going forward, is what the brokerages are also highlighting, with the 43% of LG's portfolio coming under this slab. Now, this will certainly lead to various launches in the mass premium segment, with giving a strong push to the company in terms of its export segment led by the premium products. Now, key risk highlighted by the brokerages include any increase in the royalty by the parent company, any fluctuations in the raw material prices, and even the summing up of intense competition. Now, if we look at the company's key metrics in the terms of financial performance, company's revenue growth is lower as compared to its peer, which stands at 14% versus to the peer average of 19%. But it outperforms in terms of the EBITDA margin, PAT margin, and ROCE as compared to the peers. Now, let us look at the valuation. The stock is currently trading at 51 times FY25 EPS. Now, market cap is over 1 crore, but Havells is trading at somewhere 45 times, Blue Star around 40, and Whirlpool over 27 times. So summing up overall, the valuation is in line with the peers is what we are understanding after the listing.
All right, we take that point. Thank you so much, Upasana, for joining us with all those details. In fact, we spoke with the top management of LG Electronics. They spoke about their reinvesting plans in India. Listen into what they had to say.
We are reinvesting here in India. We are coming up with our third plant. It's in Sri City, Andhra Pradesh, where our $600 million US dollar investment we are doing. We are doubling up our capacities. We are investing in new products, new technologies. We are also investing to improve the retail infrastructure in Tier 2, Tier 3 town, introduction of many new products. We are also scaling up our B2B business. That's our focus area.
The listing of the day, LG Electronics India. We'll take a short break, put the spotlight on the crypto markets. On the other side, Manisha Gupta joins in with Sumit Gupta, the co-founder of CoinDCX.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and joining us now is on Crypto Corner is Sumit Gupta. He is co-founder at CoinDCX. Sumit, hi, thank you so much for joining in. First of all, the kind of volatility that we seem to be coming back with over the weekend and this week now, how are you reading into it? Because the year 2025 has been amazing, and then you see a huge sell-off to the tune of $18 billion. How should one look at it?
Manisha, yes, indeed, the markets have been, crypto markets experienced a turbulent and volatile weekend. And the markets are cyclical and volatile, as we all know. But when we talk about some of this sell-off, it was mostly triggered by a lot of traders where, because of the Trump putting a tariff on China and because of cascaded liquidations, people sort of, we saw the market coming down, but who did not get impacted is long-term investors. And I think such periods of volatility will come and go. But what is important is that to invest and trade depending upon the profile of the customers. For investors, it didn't matter, like myself, for people who want to do intraday trading. For this was an opportunity as well as a moment where some of the investors essentially had to book a losses.
Sumit, how would you look at investors' discipline, especially when something like this happens in crypto market, which is more volatile than various other asset classes? Would you look at near-term and a long-term as two separate portfolios?
Oh yeah, absolutely, Manisha. I think near-term investing is basically where people are taking a view on 1 day, 1 week, 1 month. I think this is more of short-term view, which is what is more related to trader profiles. People who want to do trading either in spot or in derivatives. On the other side, people who have a longer-term view, which is 1 year, 3 year, 5 year, or 10 years, they need to look at like long-term horizon, and a lot of these volatilities actually doesn't affect them. Affect their portfolios as well. So most of the customers, even on CoinDCX, are long-term investors who are not impacted by any of such market volatility or market moves, and they can just allocate some bit in Bitcoin and just wait for like 3 to 5 years to play out and see how the portfolio is doing. And I think long-term investing is of course better for anyone who doesn't understand the nuances of the markets well.
Oh, absolutely. Going forward now, when we look at 2026, Sumit, what is it that you would want to look at? Because much of the scenario that has played out in 25 seems to be spilling over in 26 as well. So whether it is about macros, tariffs, dollar declining, other some asset classes like gold and precious metals doing well, how are you reading into the new year?
Yeah, Manisha, I think we've seen gold, silver, Bitcoin all pretty much close to all-time highs. I think this is triggered by a lot of geopolitical uncertainty that we see all around the world, tariffs getting imposed every week, and as the uncertainty increases, I think store of value assets like Bitcoin, gold, and silver will continue to cross and breach all-time highs. I do expect a positive momentum in at least next 3 to 6 months, while all of this uncertainty is around us globally, geopolitically, and a lot of things are unstable. And when things are unstable, a lot of these asset classes, which does not have to do with any specific region or a country, they tend to do generally better.
Sumit, we are nearing Muhurat and Diwali and Dhanteras, and this is the time that you see a whole host of things being bought and invested into, whether it is about currencies and commodities and equities, and cryptos have found a place within as well.
Oh, yeah, absolutely. I think Bitcoin was largely ignored asset class, I think, until 4 years back. But now, it seems to be picking up momentum. I've seen good activity, good Bitcoin buying activity, just like how people used to buy gold. During Dhanteras, we've seen a lot of that happening on CoinDCX last Dhanteras. This time, we're expecting even more. Looking forward to that. And this time, interestingly, like I buy Bitcoin every Dhanteras. My dad does it. He's a big believer and, very, very bullish on Bitcoin. But this time, interestingly, my mom has decided to take a good chunk in Bitcoin as well. So I'm looking forward to going to Indore and help her out with that.
All right. Well, you are changing generations there, aren't you? Not just the younger ones, but the older ones as well. Sumit, coming on, how much of a portfolio should really have crypto or Bitcoin within it? Because a lot of people are just waking up to the fact that, well, yes, there can be other things in your portfolio as well, especially when you want it more reasonable and more profitable.
Yeah, absolutely. I think, look, if someone is new and does not understand the nuances of the crypto markets better, it's always better and safer for someone to start their journey with Bitcoin only and take a very small chunk of Bitcoin as part of your overall portfolio, understand it, spend time reading about it. And when you get comfortable with the broader, thesis of why Bitcoin is valuable, why limited supply asset is the right store of value, then you can gradually increase your exposure depending upon your risk appetite. But I do strongly believe that for any beginners or anyone who does not understand the markets, I think it's always safer to stick to blue chip crypto assets like Bitcoin. And this Dhanteras, of course, just like how people are used to buying gold, it's a good opportunity for people to also understand and invest in digital gold, which is the Bitcoin of the young for the young generation. This is a very popular asset class. So yeah.
Oh, absolutely. And we've seen those numbers talk for themselves as well. Thank you so much, Sumit, as always, for joining in and making sense of what's happening in the space and, of course, on how the new traders should really be looking at the space. But with that, that's all the time that we have on this segment. Take a break, come back and talk about more markets and stock specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Well, Nifty is down 100 10 points as we speak. 25,120, that's the mark that we are looking at. And that fall has been quite smooth from the highs of the day. So we have JSW Steel, one of the major movers there. And Nifty is at the day's low as well. So in last couple of minutes itself, we've seen Hindalco seeing a cut from the highs. Geo Financials, NTPC, Bajaj Finserv, Sun Pharma, ITC, Kotak Mahindra Bank, most of these stocks are at the day's low, pushing the Nifty lower as well.
Foreign banks come in to take stakes in the Indian context. I think that's going to be a big theme going forward.
And you can catch India's top market experts share their insights as we enter Samvat 2082 all day today on CNBC TV 18. Welcome back. 100 points lower now on the index, taking the market conversation forward with Jyotivardhan Jaipuria from Valentis Advisors. Jyoti, good morning. Thank you for joining in. Festive greetings to you, your family and your team as well. I'm sure you would be very impressed with what you just heard from our market experts. But going into the next Samvat, what is your advice for investors, especially because of the fact that the last Samvat has been a forgettable one, if you could call it that, considering the lack of returns?
Yeah, so like a year ago, we said that the market is like going to have a largely time correction and some price correction. We've seen a classic time correction. So I guess the index is more or less flat in the last 1 year. The small and mid caps have given a negative return. So going forward, I think we'll still have a more flattish sort of market, but with a positive bias. So I think probably if we look a year down the road, we'll probably be up, maybe low double digit from here or high single digits. So when the 8 to 12% mark, we'll get a positive return coming through. So I think, that's the good news, that a lot of the time correction has happened. We've not got a return. And next year, the return will be good. At the same time, it won't be a spectacular return, which we saw, post-COVID, which people got used to a bit.
I think that's become the problem, right? That everyone's so used to those post-COVID returns that they expect it to happen every year, but that's not the reality, right? Jyotivardhan, in that case, you said time correction has already happened. Any specific sectors or stocks that you think are back to the reasonable valuations and we could see an uptick from here on?
Yes, one would be the banking sector, because, if you see the banks, even the September quarter won't be good. You have, NIMs under pressure. A lot of this has to do with the lead lag effect that, whenever rates start to get cut, then you see, your deposit rates taking a long time to get cut, real lending rates cut easily. So, the first quarter for most banks will be a negative quarter, a negative first half, but the second half should start seeing a recovery, and next year, we should see earnings go back to normal. Valuations here are reasonable. In fact, it's one of the few sectors which trades less than a 10-year average valuation. So most sectors, if you see today, if you take a 10-year average valuation and look at where they are today, most of them are at a premium to 10-year averages. The market's also at a premium to 10-year averages. But banks are one sector where they're trading at a discount to the 10-year averages.
Jyoti, what do you make of the rise in gold prices? The way the prices have moved, both gold and silver, to zero it down, your gold financiers in that case, do you believe that this quarter or the upcoming quarter as well could be a fairly decent one for these companies?
Yeah, it will be a decent one for these companies simply because, their collateral value has gone up. So the key now is whether, gold continues to do very well next year. Because, after any asset class which goes up 60, 70% in a year, then there's a period where it tends to cool off and consolidate. And so that is probably where one is looking at. But otherwise, the gold finances will have a good quarter or two going forward also. They've done well in the last, 2 quarters, as we know.
Okay. Just important flashes at the bottom of your screen. While we are talking about gold and silver doing really well, gold and silver futures have fallen from the highs of the day. So, of course, that is something which is expected as well. But the biggest question still remains whether these dips are to be bought or, this is a pause on the rally that we are seeing. But that we'll keep tracking. For now, if we look at the ETFs, the gold ETFs, they are still higher. And at a point in time, we did see silver ETFs. They were trading at a premium to physical price of silver as well, and that's the reason a lot of mutual funds, they stopped subscription to their ETFs. Kotak Mahindra, Kotak AMC, we had ICICI, all of them doing that as well. For now, again, these are doing really well, all these ETFs, 7.5% higher on Grow Silver ETF. Nippon India is also seeing gains of around 5.5%. But Jyoti Vardhan, you spoke about banking is the one which could see an uptick, and that is one sector that will benefit. Anything else that comes to your mind? For instance, new listings that we have, LG, already a 50% premium there. In that entire space, do you think there is something which stands out in general?
So, in general, the consumer sector looks good, especially the discretionary part. We don't like the consumer staples even now, but just given the GST cut which has come in and the fact that, this year there's a big income tax debate which people have got. So there's like roughly a 1 lakh crore debate which you got. So, that whole consumer durable space is one space which will benefit in terms of, demand picking up. So it would be probably consumers, it could be the autos, but it's a combination of these where people will spend some of the income. My view is like, people will, so there are two ways people always think of is the entry car which will benefit. But probably what I am sensing is a lot of people may straight away want to go a little higher than the entry car into a more premium segment. And same way, in the consumer durables also, because now prices have become cheaper, you may find that some of the premium brands are doing better than, some of the just entry-level brands. I think, that's what we are seeing across the board where people are wanting to get into premium stuff very, very quickly.
Jyoti, pleasure having you as always. Thank you so much for sparing time and joining us, and festive greetings to you once again. Take a short break. More on the markets on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Well, a lot of action happening in the F&O space as well. So let's get in Mangalam to get us all the trends. Mangalam.
Well, so it is a Tuesday today, which means it is weekly options expiry for the Nifty, and a lot of volatility cannot be ruled out. But for now, we've seen the first hour itself see a sharp fall from the highs for the frontline indices. So the Nifty Bank, the mid-cap index, all of them not in a very good mood if you're a bull. So that's why we're seeing a fair amount of selling. And that's reflected in a couple of other parameters as well, the mood of the market. The first one is the India VIX. Remember, the start of the week, the India VIX was sub 10, and now it's gone towards 12. It's 11.5 right now. So after a 10% rise, we've seen that higher by about 4.5% in today's trading session as well. So closer to 11.5. The second part that we're looking at is the market breadth. For the second, third day running, the market breadth is firmly in favor of declines as against advances. So now nearly 2,000 stocks in the red for about 800 stocks which are in the green. So those lines far and wide apart after having crisped and crossed. So that is an important part. It wasn't like just a trend day where the red lines were above the green line right from the start, but now it is crisped and crossed. So that makes it a little more difficult for the bulls to make a comeback. But who's to say they won't? Because if you look at, the day's high on the Nifty, what's interesting is what would happen with the 25,200 mark last week and the week before that is now happening with the 25,300 mark. So structurally, the market is moving higher, but only consolidating at higher levels. So October 10th, the high was 25,331, thereafter 25,270, and today is 25,310. And that's where the option writers for today are positioned themselves at as well. 25,300 call, the premium all but eroded. So the bulls believe that, this is a mark that they can't achieve. Bears believe this is a mark that they will hold. 25,200 call writers also fairly active for a premium of almost 35-40 rupees, telling you that they believe that 25,250 may perhaps also not come by. But at the lower levels, bulls are holding their horses for the 25,150 level. So the 25,150 put fairly active in today's trading session so far, telling you that 25,100 could be an important support, at least on the way down. So what is it that the option writers are expecting? The Nifty expiry range between 25,100 to 25,250 thereabouts. That's the broad range for the frontline index. And be that as it may for the frontline index, a lot of individual stocks are also seeing some long positions being added. So IREDA, MCX, ICICI Pru, all of them have added a fair amount of long positions. They're well bid in today's trading session. And among the stocks on the downside, you don't see as much shorting as you are seeing long unwinding. So KFIN, for instance, has seen a lot of long positions being unwound. In terms of short or shorting individual stocks, there isn't a case of one or two stocks which has seen a big amount of shorting. So that's a good part. That tells you that we're consolidating at high levels, and right now we're testing the lower levels of that consolidation at high levels.
Take that point. Thank you so much, Mangalam, for joining in. While we're talking of markets coming off from the highs of the day, that is something which is happening with precious metals as well. Silver, for instance, you're seeing those flashes. Silver has fallen nearly 5% from the day's high. Gold continues to be higher, but silver prices, which crossed that $50 an ounce mark last week itself, that is seeing some profit booking right now. And we are seeing that because of lack of availability of silver, physical silver, it is trading at premium as well in terms of the mutual fund numbers and physical silver as well in some places in the country as well. Hinzing, of course, is in focus. It is one of the biggest producers of silver in the country. So that stock will be on your radar. But of course, we'll keep getting Manisha as well to get you an update on silver prices. For now, we'll slip into a short break. When we come back, we'll talk more about markets on the other side. Stay tuned for that.
Welcome back. 80 points lower on the index, but the bigger highlight of the last 10 minutes has been the sharp fall in the prices of gold and silver. Silver now is below the $50 mark, and gold is also below the $4,100 an ounce mark, and that has shown an impact on all of these gold and silver plays. You take a look at Manappuram, take a look at Muthoot, take a look at Hindustan Zinc. All of them have come off the highs of the day. Then you can see the correction that you've seen in silver, now almost 7% off the highs of the day. Take your leave on this edition of Trading Hour. From Sonal and me, thank you for watching. Halftime report on the other side.